is there a financial incentive for RIAs to actually recommend Bitcoin now when previously, because they couldn't custody the asset, that incentive wasn't there? And maybe that's more of a question on what is their business model? Are they paid on, assets under management?
And most people don't realize that for big institutions, Morgan Stanley's of the world, big wealth management platforms, investor and pension funds, institutions like that, their internal due diligence process can take from 3 to 9 months.
Only 19% of advisors said they are able to buy crypto in client accounts. And I think this is where one needs to appreciate how useful the registered investment advisors and client relationship is and how trustworthy it is, because it's a highly regulated industry. Welcome everyone to another episode of The Rundown. We are so glad that you have all joined us back again. I've got Michael, and we've got a special guest over here as well for episode 12 of The Rundown. Michael, who's our special guest over here today?
Special guest. Yeah, I think everyone thought they were going to be stuck with Shiv and I for 52 episodes here. But yeah, episode 12, first guest. Love to introduce Juan Leon. Juan, welcome to The Rundown.
Michael, Shiv, thank you for having me. It's a big honor. I've been following what you guys are doing for a while, and you guys put out top-notch analysis. The podcast has been great, and so it's really a great honor to be here with you guys today.
Yeah, and we've been secret admirers of Bitwise Asset Management for a while now too, so it's an honor to have you on. Yeah, I think it'd be great just to kind of set the stage a little bit. I think a lot of people are familiar with the Fidelities, the Van Ex, the Franklin Templetons, and some of these larger, traditional finance firms that are starting to get into crypto a little bit, but probably less familiar with a firm like Bitwise that's really a crypto native, asset management firm. So we'd love to just hear a little bit about Bitwise, and also you come from traditional finance. So we'd love to just kind of learn a little bit about your background and kind of how you got into crypto.
Yeah, I'll start with my background and then I'll go on to Bitwise. I come from a traditional finance background. I'm a CFA charter holder. And prior to crypto, worked as a portfolio manager at a global investment firm. How I got into crypto, my prior firm had offices in Canada and had funds that invested in precious metals mining companies. Canada is a big jurisdiction for mining, and so some of the early and first Bitcoin miners set up shop in Canada because the regulatory wise it was more favorable in Canada as a jurisdiction for mining than the U.S. Now the U.S. has expanded. The majority of the hash rate is concentrated in the U.S. Back in the day, back in 2015, 2016, 2017, those earlier days. A lot of it was happening, started out in Canada. And when one of the first crypto miners that wanted to go public, they got linked up with our firm. We were approached to help them go public. And so I was part of the team that helped what is Hive blockchain today go public, or Hive Digital. And through that journey, I learned a lot about Bitcoin mining. And I really came to the conclusion that crypto was the next paradigm in terms of the nexus between finance and technology, and that it was going to be a big asset class and an exciting opportunity. And so decided that I wanted to work in crypto full time. And that's then I started looking around, found the opportunity at Bitwise. I actually had met who is now my boss, the CIO of Bitwise, Matt Hogan. I had met him in my prior life at an ETF conference and had really hit it off with him. This was around the time that he was joining Bitwise as CIO. And so then a couple of years later, when I was looking for opportunities, I saw Bitwise, started listening to some of their materials, and ended up applying and reaching out to Matt, and then went on from there. At Bitwise now, I'm the research and investments team, and I'm a senior analyst, and I help with managing our indexes and our products, our funds, doing due diligence. Bitwise, as we mentioned, is a crypto-focused asset manager. We've been in the market since 2017, and we're best known for being the largest crypto index fund manager in America. And we're also known for primarily serving RIAs, so financial advisors and institutional investors. We've built our distribution model around serving financial advisors, RIAs, family offices, and other institutional clients. And today we probably serve more than 1,000 firms and advisors across the country. And we're a team of 60 plus professionals. We're recognized for producing high quality research, much like what you guys produce at the DeFi report, and educational content. So as an example, our CIO co-authored the CFA Institute's Guide to Crypto. And we've built Bitwise with the mission to open up the investment opportunities in crypto to professional investors. So to that end, we've built a suite of investment solutions ranging from ETFs for crypto assets, crypto futures, crypto equities, private trusts, separately managed accounts, and active strategies in order to have a variety of solutions that fit different investors' needs. Most recently, we were one of the approved issuers for a Bitcoin ETF and launched our Bitwise Bitcoin ETF that carries the ticker BITB that we're very excited about. That's a bit of a background on Bitwise and myself.
Amazing. Yeah. And congratulations to you and the team at Bitwise. I'm sure there was, I think you guys have been around for 6-7 years working on that ETF. So a ton of work went into that. So congratulations to the team. You guys are obviously super bullish on crypto, on Bitcoin, and just the crypto space in general. I'm curious, now that we have this ETF that's out there, how do you see like traditional finance merging kind of with crypto? Or do you see it that way? Do you see this as a competitive environment? Do you think it's more, these two sides are going to kind of win together? Because you really have like these two things going on. You have the assets and sort of the ability to potentially invest in those, but then you have the technology and the infrastructure and kind of what that can do just for kind of the rails of finance. So I would love to just kind of hear your view. Is this competitive, or are we all going to kind of come together?
Yeah, no, that's a great point. As you mentioned, crypto is both a technology, an infrastructure layer, a new technology rail, and an investable asset. And the merging of TradFi and crypto is one of the themes that we're excited about, and we see gaining momentum. And we do think they can coexist, and sort of the two parts together, I think, make a bigger whole than each of them individually. We see it playing out in a couple of different ways. The first way I would call the institutionalization of crypto asset management. So that's a lot of what's currently, there's less than 20% of RIAs and institutional investors that are able to allocate to crypto for compliance restrictions, for investment committee decisions. But in the coming years, and in great part as a result of the approval of the Bitcoin ETFs that just launched, we believe this will shift to a world where the majority of professional investors will allocate to crypto on behalf of clients. And most investor portfolios will have 1 to 5% allocation of crypto. So we'll go from a world where less than 20% of professional investors are able to allocate to a world where the majority will be allocating, and a 1 to 5% allocation will become commonplace in investor portfolios. The second way is the tokenization of real world assets. So for traditional assets, asset classes that face liquidity and access constraints, things like private equity or real estate, tokenizing those assets and putting them on a blockchain unlocks features that weren't possible before. So you put those assets on a blockchain, and that opens up a global marketplace that can trade on a 24/7, 365 basis at a fraction of the cost. And so that really democratizes access to these asset classes for the average investor. A third way that we see these two worlds coalescing is what I would call the mainstreaming of DeFi. So DeFi, decentralized finance, automates, lowers the cost, and improves the efficiency of financial services such as trading, lending, and insurance. So we see consumers use more of these crypto-native DeFi protocols as they scale and as they become more user-friendly. Currently, there's still, a user experience hurdle there, because you have to go through wallets and keys and all of these things that will be abstracted, and then it will be just like using a website like we do today. But there's the other side of it as well, which is that DeFi protocols, I see traditional financial services firms integrating DeFi protocols into their product offerings and into their infrastructure, so that you'll continue to use your traditional bank or your traditional mortgage lender without even realizing that they're employing DeFi technology. So I think those worlds are coalescing and will continue to do so in those ways and beyond.
Yeah, I think we share a lot of those similar views. Just one follow-up question on the tokenization piece of this, because I'm seeing you're seeing Larry Fink out there now on CNBC talking about tokenization and tokenization of the future. I'm curious if you have a view on where you think that'll play out, because we do have this you have the public blockchain ecosystems. Those are still very nascent. There's some regulatory challenges and scalability issues and things like that are being worked out. And then you have a lot of these sort of traditional finance firms building solutions on the more private permissioned blockchains. So I'm curious, when you hear Larry Fink talking about tokenization, do you view this all ultimately ending up in public blockchains and interacting with DeFi protocols? Or do you see a more bifurcated, system where people are still on these permissioned rails in the future?
Yeah, that's a great question, and something that we get asked about a lot. I see it playing out much in the way that the internet played out from between closed networks, started off with closed networks and then became the open internet that we can all use today. I think if you look at what's happened over the last couple of years, institutions have begun dipping their toes, doing pilots of the technology in many occasions, as you mentioned, in private blockchains. And that's helped them understand how the technology can work and how they can implement it into their infrastructure, into their platforms. But now you're really, as these technologies are evolving, as they're scaling more, there's still ways to go in terms of scaling, but as the scaling is getting there, you're starting to see some of these traditional firms move from closed private blockchains to public blockchains. You're now seeing them launch. We're starting to see big firms launch tokenized funds on Ethereum and other public blockchains. And so I think the missing pieces are we still need to get to better scaling. And we definitely, as you mentioned, need to have more and better regulations in place, especially in the US. As you guys know, the US is behind the curve in terms of regulatory adoption. Last year, Europe passed MiCA, which is a comprehensive regulatory framework. The US still needs that, but I think that will happen. And when we get there, I think these institutions that have been doing a lot of piloting have now figured out the kinks, and they will go full on blockchain, public blockchains once these regulations are in place, because they'll clear the regulatory hurdles, and public blockchains really give them much more scale than they can get through permissioned private blockchains.
Love to hear that. I have a similar view myself.
Yeah, absolutely. So look, this section is very exciting for me, especially. So I'm an Indian Australian. Currently, I'm in India, and I'm a visiting professor at business schools around India, teaching their MBA students about cryptocurrencies and crypto assets and blockchain. I know Michael doesn't like the word cryptocurrency, so I always correct myself. Crypto assets and blockchain, that's what I teach MBA students here in India. But before I came to India, which was in 2022, I was in wealth management in Australia, and I worked 11 years there with 5 years in wealth management at some of the largest wealth management companies in Australia. So since coming to India, being an angel investor, being a professor, a lot of my friends, a lot of the senior executives over there, they also do something similar exercise that you did, which is, doing a survey with registered investment advisors of that particular jurisdiction. So I'm quite excited to drill down and ask you a few questions about it and get the meat out of that survey, which, by the way, is very helpful for the global crypto assets community. If you can tell me, some background on the survey, like how was it administered, to whom it was catered to, and what jurisdiction was it involved?
Yeah, those are great questions. And it's so cool that you're a professor. At some later, we'll have to catch up and you'll have to tell me more about what courses you teach. That's so awesome. I have so much respect for teachers and educators. They've been some of the biggest influences in my life. I'm always grateful for educators. Yeah, our survey is a survey that we've been conducting annually. This was our 6th year running the survey. And the goal of the survey is to measure the attitudes of professional investors, RIAs, and institutional investors, that measure their attitudes towards crypto. The way the survey works, we run it through a third party in order to, be impartial and not have a bias as an asset manager. So we run it in partnership with VettaFi, which is an indexing educational platform for professional investors. We've come up with the questions and they administer the survey. So they reach out to their database of professional and institutional investors, and they gather the responses. That's the gist of how the methodology and the survey is set up. We do not pay the participants for the survey. They get to access a raffle for the chance to win an Amazon gift card, but that's all there is. So it's not a paid survey. And we sample a swath of different types of advisors across the country here in the US. That includes independent registered investment advisors, broker-dealer representatives, financial planners, wirehouse representatives, and institutional investors, such as family offices, pension funds, endowments, etc. This past year, the survey had 437 eligible responses. That's the essence of how it works.
Got it. Amazing. It's funny. It's always the Amazon gift cards. Even in Australia, it's the Amazon gift cards. Michael, you've done any survey where you got the Amazon gift cards as well?
I've got sales guys reaching out, offering them just to book a meeting.
Got it. Understood. So look, let's get to the actual survey results that came in. Let's start with especially something, which is very recent. When the survey was done, Bitcoin ETF wasn't approved. 88% of advisors, according to the survey, said they would wait until after an approval to purchase a BTC, for their clients. Are you seeing a shift in advisor interest now that Bitwise ETF has been approved? Is it as per the expectations that you had forecasted?
Yeah, that's a great stat from the survey. And as you mentioned, the survey was taken from October to December of last year, so prior to the January approval. And it shows you just how much the pent-up demand is for these ETFs. Most of the advisors we talked to who are now receptive toward crypto want to invest, but many of them couldn't just up until the ETFs because of compliance restrictions, because they didn't have a product that had that stamp of approval from the SEC that was regulated and could fit in their workflows. Now that they have launched, we see that advisor interest just continue. And for many advisors that were receptive, but many of them told us like, hey, we would love to invest, but we just can't right now. And until there's that product on the market, we can't really start doing our due diligence and our internal processes to get cleared. So come back and talk to us once that's approved. And so now we're having tons of conversations of people that have been wanting to allocate that weren't able to. And so it's very exciting. I think something worth noting is that there was the expectation of how much money is going to come into the ETFs, which we can talk to, which has been a great success. There's been total flows of about 6 billion. These ETFs have currently have about collectively 6.5 billion in assets. But there's the price action hasn't shot up as people were expecting. There's many market dynamics why that's the case that we can get into. But one thing that is underestimated by a lot of people is that this was initial buying, initial pent-up demand that was unleashed, but the real demand from institutions is yet to come into the market. Most people don't realize that for big institutions, Morgan Stanley's of the world, big wealth management platforms, investor and pension funds, institutions like that, their internal due diligence process can take from 3 to 9 months. And so if you think about ETFs being approved this month, just now they're able to start those internal conversations with their investment committees, with their compliance departments, with their outside providers. And it'll be 3 to 9 months before you start seeing the allocations from those large institutional investors. So there's a lot more on the horizon to come, but it's going to take a while. It's not a day one, month one, first quarter thing. It's going to play out over the next couple of years.
And that's where my other question comes in. This is especially interesting for me. And that's why I told Michael I would ask this question. I've seen Bitcoin, the narrative around Bitcoin as an investment, very different in different jurisdictions. In Australia, Bitcoin is thought about as an investment differently when, advisors communicate it to their clients. Similarly, in New Zealand, Australia and New Zealand, we Australians think they are another Australian state, but it's a different country. But Australia and New Zealand, we combine that together. Since coming to India, I've noticed that, Bitcoin over here is thought about it differently, let alone as an investment thesis. Being in India, I've traveled and spent a few weeks in Dubai as well. Dubai thinks about Bitcoin so differently. Everybody's gaga over Bitcoin over there. What I'm interested is, and Michael has helped me a lot in understanding on the ground how things are working in America. But according to your survey, 52% of advisors believe that Bitcoin will increase this year. 64% have thought that it will be higher over a 5-year horizon. We on the rundown talk week after week, what we think about how Bitcoin will perform. We even had, a show where we did our 2024 predictions where Michael was the special guest and he was giving the calls and I was making him accountable. Give me the price target for our viewers just so that we keep each other accountable. But I'm interested to know, given you've got that, you saw the survey, you probably got more information as well, how they came up with it. Why do the advisors believe only 52% of them that Bitcoin will increase this year, considering this year is the Bitcoin halving year? And what is the investment thesis that is driving this somewhat of a bullish sentiment from these cohorts, considering it's still 52%, not like significant amount? Give me your take. Like why the bullish sentiment?
Yeah, I think there's a couple things here. The first is that on the question of, maybe why just 52%, why weren't they more bullish given that the halving is happening and all of these industry catalysts that we know will be taking place. Yeah, so on the first part, which is why perhaps weren't investors more bullish in the survey, given big catalysts coming up this year, such as the halving that we're well aware of in the industry. The first thing with that is that most of these advisors aren't aware of the halving. They don't even know what the halving is. Most of these advisors are, just starting. As much as us that have been in the industry and live and breathe crypto every day, most professional investors and advisors in America are just now starting to dip their feet and learn about Bitcoin and crypto. So most of them are just unaware. I mean, we were talking earlier about how only 20% prior to the ETFs had access and were perhaps allocating to crypto. And we're allocating at like 1%. So that is 1% of their attention on crypto for a minority of the professional advisory cohort in the US. So most are just unaware. That's the first thing there. Now, in terms of the outlook, 52% think it's going to increase this year, 64% more bullish over the next 5 years. I think the reason for that is that many are starting to realize that crypto is not just a fad and that it's here to stay. And when you have people like Larry Fink, CNBC, talking now, endorsing crypto, calling it an international asset that can be bigger than gold, and that those kinds of things, the major institutions starting to put their weight behind the space. Advisors are realizing that crypto is here to stay, and it's going to become an established asset class. And when you compare its total market cap, which the total market cap of crypto, I think, is around 1.7 trillion right now, against other major asset classes, even things such as gold that is around 14 or so trillion, professional investors are waking up to the huge potential ahead. It's an asset class, it's an emerging asset class that's going to become established, and the runway, given that its addressable markets are not just the digital version of gold for Bitcoin, but their smart contracts and so many other addressable markets and applications, they realize that the potential is really big, and if it's here to stay, they need to start paying attention. And so I think that's where the investment thesis and some of the bullish sentiment comes from. But it's still early days. Most of them are just starting to dip their feet.
I love it. So basically, what you're trying to also say is that I'm currently a visiting professor in India. I need to come join Michael in Boston, starting our first educational trip in Boston, educate the advisors over there in crypto, and then do a US trip with Bitwise helping us to organize that. Is that happening? Is that on your cards?
That could very well be on the cards. We would love that. Let's talk more. That would be fun.
That's good too.
So speaking of smart contracts, Juan, you just mentioned related to Bitcoin, there was a question in the survey about sort of advisor preference between Bitcoin and Ethereum. And I think it was 71% favored Bitcoin over ETH. So that sort of jumped out to me a little bit. And it probably comes back to what you're saying earlier, that there's just not a ton of education out there. In particular, it's interesting to me because of the cash flows that Ethereum has. And you would think that would just be a little bit more easy for a traditional investor to kind of understand the investment case there. And also I think, potentially larger addressable market for some of these smart contract platforms. But yeah, I'm curious, what was your take on 71% actually favoring Bitcoin over Ethereum? The maxis are going to love that one.
Yeah, well, that's totally true. And actually, just to put a buffer on the maxis, the prior year we did the survey, the breakdown between Bitcoin and Ether, it was something like 52-48. So it was almost 50-50 the prior year. I think this year, the reason it went up to 70-30, I think it was all the attention last year on the spot Bitcoin ETF race, the applications from BlackRock, Fidelity, all the major institutional players, established institutional players coming in, really shining a spotlight on Bitcoin, on the opportunity about Bitcoin. Last year, everything was Bitcoin. It was all Bitcoin all year in the media headlines. Again, talking about investors that pay very little attention to crypto, everything they heard about last year was just, oh yeah, Bitcoin ETFs, there's a huge opportunity. Bitcoin is the next international asset, these kinds of things. And so I think it really took the shine off of Ethereum. But I do agree with you, when we speak to investors, it is a lot of the time easier for them to connect with Ethereum than it is with Bitcoin because of the component of cash flows and being able to value it as a cash flow producing technology platform.
So one thing I always think about with RIAs, and correct me if I'm wrong about this, and it always kind of comes back to incentives. We talked about the Amazon cards to incentivize people to take this survey. I'm curious, like, my view was that RIAs, it would be hard for them to potentially recommend Bitcoin and crypto to their clients just because they can't really custody these assets alongside the other assets that these advisors are managing on behalf of clients. So I'm curious, like, now that you can buy an ETF, you can custody the asset alongside the other assets, is there a financial incentive for RIAs to actually recommend Bitcoin now, when previously, because they couldn't custody the asset, that incentive wasn't there? And maybe that's more of a question on what is their business model? Are they paid on, assets under management? But I'm curious, how do you think that plays into RIAs and advisors in general recommending Bitcoin to clients?
Absolutely. I think you're right on with that one. One other stat related to that from the survey is that 59% of advisors responded that some or all of their clients were investing in crypto on their own. outside the advisory relationship. And as you mentioned, advisors do get paid based on AUM, under the assets under management that they advise on. And going back to the conversation about the Bitcoin ETFs, and before these ETFs, they had no way to bring them into the fold. They couldn't buy Bitcoin for their clients because they couldn't custody it in their platforms. It wasn't allowed by compliance. Now this ETF allows that integration into their advisory platforms, into their reporting systems, into their workflows. And so they are able to now, I think, have more of an incentive to recommend, because they wanted to before, but they couldn't. And now they can recommend it, educate clients and say, okay, here's a way that you can invest. Here's a way that we can bring it into the overall portfolio of assets that I manage for you. And so we think it's a great opportunity, a great business opportunity for savvy advisors. And we also think it's an opportunity where advisors can really help clients make smarter choices, where they can, if anything, we think it's an opportunity for advisors to deepen their relationship with their clients, because they can deepen the trust by educating them on this new asset class, helping them make smarter choices. The crypto is so volatile, and the impulse is to buy and sell at the worst times. Advisors can bring that financial expertise and that rigor for rebalancing, for portfolio management, that can really help investors take advantage of the opportunities in crypto.
Yeah, it seems like it's a kind of a no-brainer, obvious, like new line of revenue for advisors. And I'm curious if you guys have any information on like age groups. Like, so now that maybe some millennials are starting to come of age and are actually managing other people's money, I'm curious, do you see anything on just sort of the demographics on which advisors are actually recommending this stuff? I think there's a lot of views on like sort of just crypto in general, and people think it's sort of like controversial for various reasons, but I always think it's really more just a generational gap. So curious if, I guess, just as time goes on and more young people are in more sort of those positions where they're managing other people's money, or they're taking leadership positions within corporations or governments. Curious if you guys have any data on just like demographics there.
Yeah, absolutely. That's a great question. And there definitely is a generational divide for various reasons. One, younger generations are more tech savvy, and so they've grown up with learning about this technology or embracing it easier than older generations. Also, in terms of investment profile, right? As the older you get, less risk tolerance you have, the closer to retirement age. So it's easier to justify it in a younger person's investment account, because they can weather cycles and weather the volatility. For both of those reasons, it definitely is more receptive towards younger audiences. But there is going to be, as you were mentioning, this huge generational turnover of wealth from current generation to the younger generation, as that generation shows in surveys and polls that they look at crypto favorably and want to incorporate it. And we think that's why we're really bullish on those allocations becoming commonplace in investor portfolios.
So look, I've got a bias towards the number 88 or 888. It's an Australian thing. I'm from Sydney, so over there are a couple of casinos. And not that I'm a gambler for all the rundown viewers or Bitwise viewers, but sometimes for leisure, we go to a casino, play a little bit of blackjack, inspired by the movie 21 from MIT students. But yeah, 888 is something that automatically catches my attention. And I noticed in the survey, the other place where the 88% came out was that 88% of advisors received questions about crypto last year from clients. My question to you is, and it's a follow-up to my previous question where we had a discussion about education. Where are the advisors actually getting educated about it? Since that's what we figured out in this episode so far, that there is a gap where advisors just do not know very important foundational knowledge, such as Bitcoin halving period is going to happen in 2024. They do not know that. They do not know the significance of it. What are the avenues where investment advisors are getting educated?
That's a great question. Hopefully that's where both you and us at Bitwise come in play, right? With an educational component. At Bitwise, we attend conferences, traditional investment conferences, and are presenting there to clients. We do webinars with partners such as RA Channel that mainly caters to professional investors. We put out white papers. We collaborated with the CFA Institute, put out a guide to crypto. Our approach, I think, is similar to your approach, which is let's find avenues to collaborate with the traditional finance industry to expose these investors to educational avenues. So I think we're all trying to do our part, and there is an appetite from advisors. As we said, they realize it's an emerging asset class. It's a new way to bring assets for them. So it's a business opportunity. We think the takeaway from that statistic, the 88% of advisors receiving questions, is that advisors who are well armed to answer client questions about crypto are increasingly possessing a key advantage in their relationships. And they're recognizing that too. And so they're eager to learn is what we found.
Cool. That's good to know. So as you probably would have noticed with our email communication, I'm actually Stern MBA class of 2020. And it's actually at NYU where I learned crypto assets academically from Professor Ian D'Souza, who's a professor at NYU of blockchain, venture capital, and behavioral finance. And he's one of my mentors. All three of us have been in the industry for a while in crypto, for close to a decade now. And I remember in 2020, this is pre-COVID, when I was having discussion with my professor, Professor Ian D'Souza, as to what is the narrative about Bitcoin, why aren't advisors advising them and all? His response was that, there is just nothing out there. It's still a gambling, still a casino. I'm talking about pre-COVID. So for a lot of people who have forgotten about pre-COVID era, Bitcoin at that time was less than $4,000 or less than $5,000. For all the people who are complaining about the crash of crypto, anybody who held Bitcoin pre-COVID, they're still up 10x. Just a reference out there. But yeah, one of the things that I liked about the survey, and I'll tie up the context that I've given, is that in 2020, there were literally, not many options for registered investment advisors in the US to allow their clients to invest in. And as per the survey, which was done by you and Bitwise as recent as end of last year, it said that only 19% of advisors said they are able to buy crypto in client accounts. And I think this is where one needs to appreciate how useful the registered investment advisors and client relationship is and how trustworthy it is, because it's a highly regulated industry. And by that, it requires a lot of complexity in the processes as well. So for a layman, when they hear only 19% of advisors said they are able to buy crypto in client accounts, they automatically think it shouldn't be that hard. Me being a wealth management professional in another sophisticated country like Australia, know how difficult it is to do these little things. But it would be great if you can, advise us, being an ETF issuer now, at the scale as Bitwise, for our rundown audience as to why only 19% of advisors are quote unquote able to buy crypto in client accounts. Why is it so complex?
It's a great question. They are literally not allowed, 81% are not allowed by their investment departments, by their compliance departments to touch crypto in client accounts in any way, shape, or form. So they're not approved on their platforms to invest in any of the private trusts, invest in any of the separately managed account solutions. Even, many of them were not even allowed to invest in the publicly traded ETFs that held crypto futures prior to the ETFs that held Bitcoin futures, or that even held publicly traded crypto companies, the crypto equities. They were just not allowed to do this. Now those platform approvals are starting to happen with the ETFs. It's just been a big compliance hurdle. When you were hearing of fraud, also it didn't help in 2022 when FTX and all of the other implosions happened. Maybe some of the products were there. The Bitcoin futures ETFs have been around since 2021, but investment compliance departments were absolutely closed off to even considering them, because the headlines were that crypto is a total scam and FTX is defrauding everyone and their mother. So the perception is one thing. Then the access to solutions that fit within platforms is another one. And so now I think we're through the other side where we've cleared the FTX hurdles. You have Larry Fink and big names endorsing crypto, so that helps the public appearance. And you have now the easiest thing, which is, even futures and crypto equities are not the underlying asset. They're highly correlated and all of these things. But some advisors, if they want to get exposure, they want to get exposure exactly to the thing that it's supposed to be. And so the ETF really solves for that.
That's amazing. That really helped me also understand it. And I'm pretty sure the viewers on the rundown also get an understanding of why it's complex. But the key takeaway from your response is that next year when you do the survey, the figure will probably be much higher than 19%, where advisors would be able to buy crypto in client accounts.
I would expect so. Again, we always take the survey at the end of the year. And so if many of these advisors are starting to do their due diligence now, we do hope that by the end of the year, many of them will have cleared the hurdle.
The stigma needs to go away, Shiv.
Yeah, absolutely. That's why Bitwise and Rundown, we got to do more of this thing so that clean people come and educate about crypto. That it's not a bad thing. It's not a bad thing. Let's transition to something that both Michael and I are very excited, and I'm sure you are excited ever since the approval came in. It was honestly like we did our last episode about the ETF approval, And, I got feedback, and I'm sure you got feedback as well, Michael, that it reflected on our face. It didn't matter that Bitcoin went down by 10%. We got the ETF approval. The industry is getting mature. It was a great event. So we're transitioning into that section now, Juan. Bitwise is one of 11 issuers that were approved. And it's a great thing for all the issuers, but also for Bitwise, who've been believing in this much longer than a lot of your other peers out there. So can you give us a breakdown of the ETF by the numbers so far? Maybe in aggregate, and then Bitwise in particular. How should we think about this in relation to the typical ETF that is issued?
These ETFs have been a great success. If you think about what's happened, they launched on January 11th, so we're less than a month in, and the ETFs in aggregate, all combined, have seen total flows of over $6 trillion with net flows of $1 trillion. That's because, there's been a lot of assets being sold out of GBTC as it converted, and a lot of that has moved into these ETFs. So net from inflows and outflows, net inflows have been $1 trillion, and the AUM in the ETFs as an aggregate is sitting at 6.5 billion. Of that, Bitwise has currently a little over 600 million in assets. So we're currently sitting at about 9% of the market share of AUM in Bitcoin ETFs, and we're pretty much tied with ARK in third or fourth place in terms of assets gathered. BlackRock, Fidelity being 1 and 2, which is a really great outcome for Bitwise, and we're really proud of it, given that, BlackRock, Fidelity, these firms have trillions of dollars in assets. We have a little over $1.5 billion. So we're really happy of the result. We're happy to be competing with the traditional players that have come in last minute to get their foot in the door. We've been doing this for many years, as you were noting. And so I think the market is recognizing that there is a place for crypto experts and specialty asset managers that focus only on crypto. BlackRock, Fidelity, and those companies, they're great companies, but they do a million other things. We do one thing and one thing only, and that's crypto. And for an asset that is an emerging technology that moves fast, that is volatile, I think there is a place for an expert to help guide you.
Absolutely, Juan. Great. So just to confirm again, especially for our viewers, you said $6 trillion, right? I heard that correct?
6 billion. I'm sorry. 6.5 billion in assets under management currently.
Got it. 6.5 billion assets under management, and that also in less than a month.
Yeah, if you put it, I think the way to think about it is if you put it in context, in 2023 or from 2023 till now, there's been over 600 ETF launches. And in terms of the assets gathered, Fidelity and BlackRock ranks in the top 3 of all 600 plus ETF launches last year. Fidelity's in the top 7, and BlackRock and Bitwise and ARK are in the top 25. So these ETFs are in the top 25 or better of all of more than 600 ETFs launched, which is incredible.
Says it all right there.
Right,
yeah.
Michael? That's impeccable. 6.5 billion in less than a month. I want some meat on the rundown now, Juan. I want something exclusive from you for this podcast. What is Bitwise projecting for total inflows this year for Bitwise Bitcoin ETF and all Bitcoin ETFs combined? If you have done that analysis within your strategy team, I want something exclusive on the rundown from you.
Everyone loves a good prediction, right? We were coming into, before the approvals, came into the year thinking that ETFs as a whole, all of the ETFs combined, could have inflows of somewhere between 2 and 8 billion. Now that we're sitting at 6.5 billion already, and as I was saying, we think more unlocks from big institutional investors will come down the line this year. I think we now are raising that maybe to somewhere between 5 and 15 billion coming in this year. And we were on the conservative side, on the lower end before, so maybe we'll be surprised again. I think that's how we're seeing it. We're definitely seeing the opportunity come even faster than we were anticipating.
So my grandfather always told me, because I was this kid who was always curious, and I've traveled the world, worked in various countries. He always used to say that, Shiv, expect the unexpected. So I guess that should be the motto for all Bitcoin ETF issuers. Do your strategy, do your predictions, but expect the unexpected, mostly for the optimist side.
Absolutely. I think that's exactly right. I think prepare to continue to be surprised by the ramp up. There's this year, but then there's the following years. There's many predictions by various firms of how much these ETFs could gather over the coming years. And while this year it may be, between 5 and 15 billion, over the next coming years, predictions range from 30 billion to over 150 billion in assets. So you can gauge there why so many issuers were excited about putting in applications. The opportunity is quite large. What's another fun stat for your listeners is Bitcoin being a commodity, a digital commodity, in many ways competing as a store of value with gold and perhaps other precious metals such as silver. Bitcoin ETFs already have more assets than silver ETFs. Not as much as gold ETFs, but they already have gathered more assets than silver ETFs.
Wow. Do we know how close they are to gold so far? Not to put you on the spot.
As of the end of last week, gold ETFs had 96 billion in AUM, and silver ETFs had 11 billion in AUM. Now, I know I mentioned 6.5 billion. That's the new ETF issuers that doesn't consider GBTC, which converted. So taking GBTC into account, spot Bitcoin ETFs now have 25 billion.
Yeah, I was going to say, basically, I've asked you a lot of questions. Before I hand it over to Michael, I just have a quick question. One thing that I really applaud Bitwise, and I believe your strategy team and senior executive team came up with this idea, but your Bitwise Bitcoin ETF has 0 fees right now. And I applaud you for that. I think that is one way to, get people confident, get the advisors to do it, that introductory period. Curious if you can share anything related to the strategy on that, like the boardroom strategy that you all were involved in coming up with this, and if we should expect it to change later, which I assume we would, but would be better to hear it from you. And how do you see the ETF impacting Coinbase?
BITB, our Bitcoin ETF, has all-in management fee of 20 basis points. And as you mentioned, that fee has been waived for either the first billion in assets or the first 6 months of trading. And the thought behind that was it's going to be, with potentially what ended up being 11 issuers coming in, it's going to be very competitive. And for Bitwise, that is not a household name. This was a way that I think we could make it easier for people to decide to invest with us. And so we think it's a great benefit to investors. You get your first 6 months free with no assets, no management fees being charged. And then after that, it's 20 basis points, which is one of the lowest costs out of all the issuers. Yeah. And last thing, in terms of what you said about Coinbase, we think that's an under-recognized opportunity by Wall Street about Coinbase. Coinbase is I believe it's the custodian for 9 or 10 of them, or 8 or 10 of them. The majority of them are custodying with Coinbase, and it charges a fee on that. And I think as those assets grow, it's going to be a big additional revenue driver for them.
So just quickly on that. So I've written small angel checks in crypto companies in Asia, Australia, and a couple of them in US as well. And I also saw a similar report that Coinbase is a custodian to 8 or 9 large crypto asset managers. When I saw that, I'm like, there is a massive gap now in at least US for entrepreneurs to build custody businesses. Like 8 or 10 already, like they got such a market share. And by virtue of that, I also believe, I think we discussed it on the rundown a couple of episodes ago, or last episode, where we were saying Coinbase is undervalued. Thank you for sharing all that. It's definitely insightful for me. Over to you, Michael.
I wanted to get a little nerdy here, just on like the mechanics of the ETF and like how this works. So I'm curious if you can kind of walk through a little bit of like, where people can access the Bitwise ETF, and then how that works. So when they're purchasing through whether it's their 401k account or their brokerage account, how does that work? They purchase through there. You guys are buying Bitcoin on the back end. I'm just curious kind of how some of those mechanics are working. Are you guys buying Bitcoin on a daily basis? Is that how it works?
How it works with ETFs in generally is you as the end investor will, as you said, go to your brokerage account, find the ticker, let's say in this case it's BITB, you want to buy it, you place a buy order, and then what happens on the back end is that order gets routed to what's called an approved participant, and the issuers have a handful of those. They're Goldman Sachs, JP Morgan, big firms like that, who have the ability to aggregate buy orders, and then they aggregate that money that is coming in, and they give that money to us in exchange for shares that are created of the ETF. And those unit shares are what you get in your brokerage account. And so on our back end, we go and we work with one of the great things we believe that's not talked about, but another great benefit, I think, of BITB versus the other issuers is that we have the most trading counterparties that we work with to source liquidity to buy Bitcoin. And so our portfolio management team will then work with the counterparties to get bids, and they'll go out into the marketplace and buy the Bitcoin and then deposit it with with the custodian, which is for us, it's Coinbase as well. That's sort of the nerdy background
Awesome.
mechanics of
Yeah,
it.
appreciate you sharing that. I noticed something pretty cool, and I think the Bitcoin community really likes this, that you guys recently released the Bitcoin address publicly as well. I'm curious, what was the thinking behind that? I think just the transparency of Bitcoin and public blockchains in general, it really kind of just fits the ethos of the community. But yeah, curious what went into that decision.
Part of the reason we're here is that crypto and blockchains can update the financial system and make it more transparent for everyone. You know, these ETFs now buy Bitcoin that is available for anyone to see on the blockchain. As a crypto native asset manager, we wanted to bring that ethos and that transparency into the traditional financial system. And so by making your address publicly available, there is no issue with being hacked, because that's not how the technology works. So it wasn't a risk for us, but it was an opportunity for us to bring transparency and trust, I think, and increased trust, which is what the whole industry is about. And so that's what drove our decision. We were the first ones to release our address. Hopefully all the other issuers do the same and it becomes the industry standard.
I love it. I love to see that. Then the other really cool thing that I saw that you guys are doing is actually giving 10% of the profits from the ETF itself back to Bitcoin core developers. This is like really cool. Shiv and I haven't even talked about this just yet. Yeah, I would love to learn more about how that works. Like, how do you decide who gets the money? How is that getting paid out? Really cool to see you guys supporting Bitcoin and open source developers as well.
Yeah, thank you. Yeah, we've been in the industry from the get-go, and we want to give back to the industry, and we have close relationships in the industry. So we thought this was a great way where through a TradFi vehicle, we can give back to the ecosystem. So we're committing, I think it's over the next 5 years, to 10% of the profits to go back to, we picked 3 different organizations. One of them is called Brink, which is a well-known funder of open source developers, of core Bitcoin developers in the space. Then OpenSats is the second one. They have similarly a grant process for Bitcoin core developers. This is an organization that's also funded, for example, by Jack Dorsey. And then we're working with the Human Rights Foundation as well as a way to also, they fund public goods and they fund applications for human rights. So we wanted to do something in the crypto native space, but also benefiting public goods and human rights as well. So we're working with those three organizations.
Amazing. Yeah, just love to see that. I just wanted to highlight that. I think that's super cool.
We're not doing a live podcast in person, so I can only do virtually this thing. Honestly, it deserves an applause for both the reasons. Not only for you sharing your 10% profits with Bitcoin core developers that honestly not many people talk about, because all the YouTubers or all the people, they always talk about price predictions. And I'm going to say it again, drawing dinosaur charts, because somebody commented that they loved it when I said that. But yeah, I think Bitcoin core developers are the, unsung heroes of the Bitcoin protocol, the hard work they do. So it's amazing that you guys are, dedicating 10% profits, in my opinion, in my humble opinion, the real heroes of the security of the Bitcoin core protocol that is eventually going to make it, a multi-trillion-dollar asset. So great work there.
Absolutely. They're the backbone. They're the life and blood of the industry.
Absolutely. And look, on that note as well, sharing the BTC address for the ETF public, this is the kind of, initiatives that we want industrialized Wall Street machinery like yourself, like more ETF issuers to do it as well, because that will bring transparency to this industry that is just started, and I believe is still in the innovator space of the Crossing the Chasm framework. This was great. You want to know more about the Bitcoin ETF. Now, what other crypto products does Bitwise offer to advisors and institutional clients? And are we going to see an Ethereum ETF in the horizon, or have you applied already? Another exclusive on the Rundown podcast I want.
Well, we have not yet applied for an Ethereum ETF, but I cannot guarantee, but I believe we will be doing that coming up. We certainly intend to continue rolling out. ETFs are the most popular investment vehicle for professional investors. There's many advantages to them versus mutual funds, private trusts in terms of liquidity, in terms of taxation. So they're the preferred investment vehicle for professional investors, and we certainly intend to continue rolling out. We launched the first crypto equities ETF, which is now the largest crypto equities ETF as well. We've launched Ethereum and Bitcoin futures ETFs. We now rolled out this Bitcoin ETF, and so we certainly hope Ethereum is the next one in line for us. I think there's applications from other issuers that are coming up this year. The SEC just last week punted their decision, delayed the decision to later this year, and we'll see what happens this year. I am on the side that it's less likely that Ethereum ETF will also be approved this year. If you think about it, it took 10 years for Bitcoin ETF to be approved. The first application was in middle of 2013. That also, I think, shortens the time frame, hopefully, for Ethereum ETFs because the groundwork has been laid. But Ethereum ETFs will have to clear their own hurdles. There's questions. A big determinant and hang up for the SEC for approving Bitcoin ETFs was the depth and liquidity of Bitcoin markets, the spot market, as well as the futures market, and having regulated futures. Ethereum has that as well. They have regulated futures on the CME, but the futures and their spot market is just not as large and as liquid as Bitcoin's. So I think that perhaps needs to grow a bit more. And then there's also the questions of Bitcoin is more widely accepted as a commodity. Again, regulations still have to define that in stone, but it's more widely accepted as a commodity. Certainly Gary Gensler and the SEC staff view it. If anything, they've commented that they view perhaps Bitcoin as maybe the only way. And so Ethereum will have to clear those hurdles as well. The determinations of its decentralization, the extent of it, it's certainly very decentralized, but not as decentralized as Bitcoin. So it'll take some time, but hopefully it takes not 10 years, but maybe a lot less. Yeah, maybe 1 year, maybe less, maybe more, but a lot less.
As we sort of wrap it up here, Juan, I'm curious, like, what other areas of crypto, like, are you interested in? Is there anything just on your radar, any certain sectors or use cases that you're really excited about for maybe like this year or next year?
Yeah, absolutely. Well, I'm really excited about the tokenization of real world assets that we were talking about earlier. I think that's going to open up markets and continue to bring in institutions to the space. I think more crypto natively, I think you guys have covered quite well, both zero proof knowledge technology that I think will help abstract a lot of the sort of user end experiences that need to be improved. And there's also emerging areas such as decentralized physical infrastructure, DePIN, that I think does community co-location of physical infrastructure to bring it onto the blockchain technology stack. So I think those are huge areas of opportunity, and I'm very excited to see developments there.
Yeah, Shiv, we're gonna have to do an episode on both of those topics, I think, in the next few months.
Yeah, let's definitely do that. Juan, this was like fantastic. I think, Michael, wasn't it? This was a fantastic show.
Fantastic. Yeah, I really enjoyed it. Juan, thank you so much for coming on. And, we're only a few weeks into the ETF, so we're probably going to have you come back in 3 or 6 months or so and then do another recap.
I would love to do so. This has been really a lot of fun. Great to be with you guys. I think we're all excited about what this year has to bring. So let's continue on and let's see how we can keep on collaborating together. This has been fantastic.
Absolutely, Juan. So for our viewers, for the rundown, where can people go to learn more about you and Bitwise?
Yeah, thank you very much. You can find me on LinkedIn or Twitter. My Twitter handle is @singularity7x. And then you can find Bitwise on our website, bitwiseinvestments.com. We're happy to talk to you any day about crypto.
Amazing. On that note, we'll just close this discussion off. I really thank you for the time that you've taken. We've spent more than an hour talking about this, and there was never a dull moment in the conversation. How was the Rundown podcast experience?
It's honestly one of the best experiences I've had. You guys were so organized and the discussion was so lively. Great questions, great comments, and you just kept it lively and fun the whole time. So I really had a great time.
Great first guest. Yeah.
Absolutely, Michael. Great first guest. So look, thanks a lot, Juan. Thanks a lot, Michael.